Welcome to the Pot Live Podcast. I'm your host, Lenny G, and I can't believe it. We've already broken through 100 episodes. We want to thank you, the listeners, thousands of you that have sent beautiful comments, beautiful notes to us. Thank you for listening. We hope you enjoy it. This next year, we're going to bring you the thought leaders, entertainers, trailblazers, CEOs of all the cannabis companies you want to hear from. People that are inventing new products, people that are bringing this cannabis industry to the mainstream. We are going to offer you education, value, and entertainment. Thanks for listening and enjoy the show.
Looking for the only one-stop online platform in the cannabis industry? Then you have to check out MJ.com. MJ has it all. The latest news and trends, exclusive original content such as the MJ CEO interview series featuring celebrities and business leaders, and best of all, delivery of your favorite cannabis products straight to your front door. That's right, MJ.com now offers statewide delivery of your favorite cannabis brands directly to your home or office in California. Check out MJ.com today.
We are back with another episode, and today we have a repeat guest that everyone seems to enjoy. I know I enjoy. Mr. Matthew Carr. He is the Chief Trend Strategist for the Oxford Club. You can find him at profittrends.com. You can see him on YouTube. He's been on the show plenty of times. Matthew, welcome back and Happy New Year.
Thanks for having me, Lemon, and Happy New Year to you too.
Excellent, excellent. So we are recording this in mid-January, everybody that's listening, of 2021. We put 2020 behind us, hopefully, who the heck knows? And we're going to talk about the world of cannabis stocks with Matthew again. So Matthew, obviously 2020, the cannabis stocks had a great year. A lot of it was due to the election and what people were anticipating. Now the election's over. The change of power has happened. What do you see as the overall industry trend for 2021, in your opinion, for the cannabis sector?
I think we'll still continue to head higher. I think there's the opportunity here for legalization, especially at the state level, to continue to expand. I think there's probably about a half dozen states that are going to start debating it and seriously looking at either expanding their legalization markets or entering into it this year. We also have things with the Democrats now controlling the White House and the Senate. The prospects are really bright for some change at the federal level. I wouldn't expect like a overnight legalization, but I do think you could see something like the Safe Banking Act or the MORE Act sort of get passed and pushed forward. And that would be a real big boom for the industry, especially if you can get rid of something like the tax code like 280E, or any sort of allowing the industry to actually have access to the banking that all the other industries in our country enjoy, that the cannabis sector does not.
That would be great. And I know on Joe Biden's website, he clearly states he's in favor of federal legalization of medical marijuana, and he wanted to leave recreational to the states, I believe. I don't know if that's the latest update, but I know I saw that recently on someone posted from his website.
Yeah, that would probably, for me, what I've said the last few years is that medical would be first, and one that would help again patients who are like either snowbirders going from Massachusetts or Maine down to Florida, that you could have your medicine available to you anywhere in the country that you went, right? So that you could always have access to it. So I think that would be the first move. Recreational, I believe, will probably continue to be led up to the states until we pass the next 5 or 6.
Yeah, exactly. Then it'll just be, once it gets to a majority of recreational, then they can have the federal discussion, I guess. But all right, so we're going to have some fun today. You ready, Matthew?
Sure.
We're going to call this the Magic Matthew Millions game. So I want to pretend I hand you $1 million. It's your lucky day. I handed you $1 million, and I want you to allocate that to 7 cannabis stocks, however you see fit with that $1 million for, this is it. This is your nest egg. Boom, $1 million. How are you going to allocate those 7 stocks?
Okay, so that's an interesting place to start with. Now, first, I will say I believe in equal weighting positions. I don't believe in a market cap weighted approach or anything like that. For me, if everything's equal weighted, you get the benefit of not only evenly spread risk, but also that upside growth. Now, the 7 cannabis stocks for my just sort of all-time portfolio, I think the first place I would have to start with is Innovative Industrial Properties. That's the Cannabis Real Estate Investment Trust. Right now, you've got about a 2.55% dividend yield at our current prices, which are right near $200. But IIPPR has been raising its dividend and ever since it's gone public, and has all of its rentable square footage from its 67 properties. Those are currently leased with an average remaining term of a little bit more than 16 and a half years. So to me, that's a good place to start because that is the only dividend paying pure cannabis play. And that is where you can continue to build, have that compounding, push those return hires. I'm also still a huge fan of Curaleaf. This is the largest MSO in the US. It has 96 dispensaries with operations in 23 states. Revenue is over $200 million per quarter. That's larger than anyone else in the industry. It'll also be the first cannabis company to hit $1 billion in annual sales. So it's just kicking off its adult use operations in Arizona after the election. And this is the company that, as cannabis legalization spreads across the US, I think will be in the best position to maintain its market share and kind of build on that. Third, I'll have to go with the other kind of big player here, which is Canopy Growth. Canopy is becoming a little bit controversial, but I believe it will be the largest international player, not only continue to still be a force to be reckoned with in that Canadian market, but you have all those celebrity partnerships. You have those premium brands, which I think will help expand its brand presence more easily than some of the others. And right now, those shares are trading around $35. That's still a way off from the highs we saw in 2018 and 2019. You also have the Constellation backing for beverages. So I would definitely, for a long-term hold, would put there. Aphria, Tilray, that new merger.
I was going to ask you about that deal anyway. So why don't you give us your thoughts on that deal and what that does for that combined company?
I think it's interesting because I think, you guys 16% control of the recreational Canadian market. Tilray has 4%. So I think they complement each other, but then you also have that overseas access. There's overseas markets like Germany, Israel, Mexico, Malta, the Netherlands, and Poland. So for me, this deal was an interesting merger of complementary forces, right? So Aphria, when it launched, its focus was being this low-cost producer, kind of building itself out, keeping all those operational costs as low as possible. It is profitable. It is seeing growth. The last quarter was $160.5 million Canadian, which is pretty strong. Tilray, I was very bullish on this company pre-IPO, and I recommended it then, and it shot all the way up to $300. And then I became extremely bearish because this is one of those situations, kind of like what we're seeing in certain pockets in the market now, where when that thing took off, when Tilray shares took off, my phone was blowing up. Everybody was calling me. They're like, I'm making money left and right. I'm just buying weekly options. It's just rigging the cash register. And I was like, I am bearish on that company. Since then, it's been hard for me to change my tune, especially as you see all those losses, right? Its losses are continuing to be pretty large, despite the fact that, sales aren't anything to write home about. So this combined company now is going to have what they say is pro forma of 685 million Canadian this year. The bright side, that's more than Canopy, right? And if you're looking at, Aphria Tilray, which is going to trade under a Tilray symbol, versus Canopy, it trades at a much bigger discount to those sales than Canopy does.
And even Aphria, if you buy Aphria right now, before it closes, I think they get 0.83 shares of Tilray. I think there's a little arb there, a little spread.
Yeah,
still in Aphria.
And there's still like a pretty good upside there. For me, like I said, I've been a fan of Aphria for a long time. I've been very bullish on the company long term. I would have just bought shares of that company and held it, but the merger with Tilray, what they're looking at right there is they want to take those assets. They want to have that access to the European market. Tilray has a lot more cachet in investors' minds, especially here in the US than Aphria does, even though Aphria is a much larger player. And then you have that Anheuser-Busch joint venture. So I like that company long term, I think you're going to probably see a couple messy quarters as once the merger gets underway and you have like all those operations blended. But I think long term, it'll be good. It's really trying to expand beyond just Canada, beyond just North America, and really think about Europe. So I do like I said, do like that company. It was an interesting merger, and I would take it solely on on the strength of Aphria's business.
Right. Yeah.
Not and it's the strength of Aphria's business with Tilray's sort of cachet and deals.
Got it. All right. So that's three, I think. IIPR, CGC, and APHA.
Yeah. And then, Trulieve has done a fantastic job. It has those 70 dispensaries in Florida. It owns the majority of the Florida market. So when adult use is legalized there, which I think we are heading to, it's in excellent position to really see sales boom and really capture the rest of that market. But it has finally begun to push beyond Florida to California, Connecticut, Massachusetts, and Pennsylvania. That's where its other 6 dispensaries are located. So this year, we're looking at a little bit more than $800 million in revenue. But more importantly, earnings are of $1.24. That's the expectation. Trulieve's strength has been it's one of the most profitable cannabis companies in the U.S., as well as the most profitable MSO. So that's why I like that. Number 5, GrowGeneration. This is kind of hard. This is the largest hydroponics retailer in the U.S. I've been a long proponent of the company. I've been on your show and talked about it in the past. I would definitely have that in my long-term cannabis portfolio because, again, as legalization spread, so does its business, right? It's already raised guidance for 2021 to $335 million to $350 million. It plans to have 55 stores by the year's end. So that's a huge opportunity. I was asked about $50 share price.
I think I've been in it since 7, thanks to you. In like July, we talked about it, I think, on the first time you were on the show. So thank you.
Yeah. It's been good. Like we closed out 1,000%, more than 1,000% gain this month on calls that we had on that. I maybe wait for, like IIPR, GrowGeneration, maybe wait for a little bit of a dip. And then finally, Green Thumb Industries, which is, to me, in my mind, the second largest MSO in the U.S. It has licenses for 96 dispensaries. It's reported $100 million plus in revenue for 3 straight quarters. So those 7, to me, that's a safe, long-term, conservative cannabis portfolio. Like if you were going to do $1 million and just you wanted it protected and just continue to grow. Now, if you wanted something more speculative,
like the risky. Give us the risky play, Matthew.
Right? Companies that I think in 5 years or so will be at maybe those Curaleaf or Trulieve levels, then my 7 would be, I'd go with Columbia Care, Planet 13 out of Nevada, Acerage Holdings, PharmaCielo for some Latin American exposure, Cresco Lab.
I don't even know that one. What is that? I'm going to write that one down, Matthew.
PharmaCielo. So there's 2 big Latin American companies, PharmaCielo and then Khiron, which is Khiron. So these are both operating out of Colombia, and they are exporting to the Latin American countries. Now, that in itself is a very interesting market because we're talking 675 million people. Their cost to grow cannabis down there is very, very, very cheap because you're going to use a lot more outdoor operations instead of like in Canada where you're going to do a lot of greenhouses. So they're going to have big, huge operations that grow outside. So PharmaCielo, I like for that Latin American exposure for the long term. And my other speculatives like Cresco, which is becoming profitable this year. OrganiGram, which I have liked a long term. They've got beaten down, Canadian producer.
Yep.
And then you have like the greenhouse operator, like Village Farms International. So that would be my speculative 7 that a lot of those trade under $15, most of them under 10. And that, like if you wanted $1 million to try to double in 5 years or 10 years and evenly split among those, that might be the approach I would take. The other ones, I would, that would be my more conservative, like I'm sure these are going to continue to make their way forward.
Yeah. Now, I appreciate that. Do you have any concerns that during 2020, a lot of the stocks that we just discussed, have run up more than double, triple, sometimes 4x, or even more, like a GrowGen? Do you have concern that, okay, it ran too far? Like you said, wait for the dips on a couple of them. Are you buying a lot of these now, or are you just holding positions that you had that are in the green? Like, you know what I mean? That you're like, what are your feelings for a new investor now coming to the market today? Is it a little scary, or?
So for me, I don't see we have a bunch of wildly overvalued stuff like we've had in the past, like 2019 or maybe 2018. Again, where Tilray was 300, Canopy was at 65, anything like that. Right now, I like, especially Curaleaf, right around it's $15. I think is still a very attractive entry price on that. GrowGeneration, it's everybody's going to pay more for that outlook, right? So that you're as that market expands, that's why
everyone's paying for future earnings and growth. And that timeline is getting extended even further in this crazy market over the last year or so.
2019, we had a very difficult bear market, especially here in the U.S. You had some really high expectations, and then the U.S., which it seems like a million years ago, but we had the EVOLI outbreak, which really hammered that industry. That was the lung disease that was killing people and hurting people and hospitalizing people because it was coming from vape pens. It was the vitamin E acetate that was being used in illicit market vapes that were making their ways into some dispensaries. So, and that really hammered the market. But for me, when you look, especially those US companies, you look at the opportunity, you look at where they're trading. I believe the US market, this is an $80 billion market, probably by 2030. Some people have it being much more than that, even sooner. I will stick with that 80 billion. And so I think there are plenty of opportunities. You have seen some companies that have really kind of fallen to the wayside and tumbled. Like I was really bullish on MedMen a couple of years ago. They've just kind of diluted their share base.
And they spent so much money on entertaining and partying and promoting that they got in trouble. Yeah.
Yeah. But now I kind of look at those shares are now 17 cents. It's an $80 million market cap, but producing more than $200 million in revenue. I like any sort of situation, one of my favorite setups is that market cap to revenue setup. Anytime a company's market cap is lower than its sales, that to me is really kind of an attractive opportunity. Vice versa. The inverse of this is like, I never talk about Kronos, right? And that's because to me, a company that's doing $80 million in sales with a $4.7 billion market cap, it just doesn't mesh.
Right. That's actually that's a good piece of advice for some investors that maybe are somewhat new to the game, is to look at those two ratios and kind of tell you what's overvalued or undervalued, or what has potential and what maybe has surpassed it already.
Yeah, that's one of the first things I look at. I look at that market cap, and then I look at what the annual sales are going to be, not only this year, but maybe the next 2 years. And you can see all right, well, this is actually trading at a value to this future growth, because there's always going to be a premium paid on shares of companies. It's every sector, it's a little bit different. And a lot of companies will either take a moment to find that median or find that average. But if you focus on that first, like that revenue to market cap, it's a really great place to start. And you can find some really great discounted companies that really do pay off in the long term.
Okay, so final question is, we discussed Canopy a little bit. I know they have obviously an interest in Acerage Holdings that we've discussed in the past, I believe, and with TerrAscend. What are your current feelings on those deals to enter the U.S. market?
So the Acerage deal to me is so funny, right? When I first started covering Acerage and when I first recommended Acerage, this was a company that was planning to be the largest MSO. It was planned to have the largest footprint. Then you had Canopy come in and offer $3.4 billion for the rights to buy it at some point in the future. It just needed a trigger event. That was then renegotiated down to 300 million. What's very interesting to me is that instead of buying 100% of acreage, which was the original deal, Canopy is now going to buy 70% and allow 30% of those shares to float. So that's why the old ticker symbol for acreage was closed down, and you have the two new ones. ACRHF, that's the fixed shares. Those are the ones that Canopy is going to buy. And then you have ACRDF, that's right. Yeah, ACRDF.
Yeah, I believe so. Yep, those are the floaters. Yeah.
Those are the floating. And you look at that and you see that the fixed shares, they're trading at basically twice what the floating shares are, because everyone believes, all right, well, Canopy is going to make some sort of move at some point. That's the premium. Now, for me, for Acreage as a company, I feel what happened is the deal kind of made a mess of the whole situation. So instead of Acreage being the largest MSO, that it, like I said, it built this board full of all of these political figures so it could do lobbying, which was a big thing everybody was doing a few years ago. Now Acreage has been leapfrogged by Curaleaf, Trulieve, Green Thumb, even Cresco. Jushi is closing in on its number of dispensaries. Sales are not increasing as much for Acreage as we've seen it and from these other MSOs. So I actually feel that the deal ended up being kind of damaging to both companies, and maybe Acreage even more so. So they're going to have the rollout of the beverage this summer, so we're going to have to see how that goes. But to me, I thought this was a deal that in 2019 it seemed like this was an easy one, and then it just became this huge mess that became complicated and confusing. So, like I said, you talked last time I was on. We talked about arbitrage between those shares, and maybe you could, but to me, it's just a very kind of wonky situation that I feel actually bad for Acreage, because I feel like that was a company that was really at the time when I first recommended it, I thought was going to be huge, was going to be what Curaleaf is right now, and it
could be why, even though Acreage shares price has gone up a little bit, it has hit a wall. Like, it hasn't stayed in lockstep with the Canopy price.
Exactly. Yeah.
So that's probably why, because of that risk of everything you just described.
Yeah, and so that's it. Now Canopy and TerrAscend, they have that financing deal that they just came out with. It was like the 20 million. That's something that Canopy and TerrAscend have had since 2017. Canopy lends money for TerrAscend for its CBD operations here in the U.S. And that's sort of kind of, a microcosm of the cannabis industry at the moment, that, for companies that when you need financing, you either have to go to some place like Green Gotham or some other larger player to get money. And so I Canopy lending money to TerrAscend, I think for TerrAscend, it's positive because it shows that Canopy still has this vote of confidence in the company. And I don't think for Canopy, it doesn't really hurt it, because they get warrants to acquire TerrAscend shares at a set price in the future.
Well, Matthew, once again, a plethora of knowledge coming from you to our listeners. Thank you so much. Can you just tell everybody once again all the places they can find you online?
Online, profittrends.com. That's my free e-letter. We send out stuff 5 times a week. You can check out Market Trends on YouTube, Strategic Trends Investor on Twitter and Instagram, and at Matthew S. Carr on Twitter as well. And then plus we're on Facebook at Profit Trends. That's a lot.
He's all over the place, everybody. He's all over the place. Matthew Carr, Chief Trend Strategist, of all those things you just named. Thank you so much for being our guest again, and we can't wait to talk to you soon.
Always my pleasure, Lynn.
All right, and we will see everyone next time on the Pot Live podcast. If you are into the recreational side of the cannabis industry, yes, stoners, I'm talking to you, then thepot.com is the online and mobile destination for you. That's right, THEPOT.com, thepot.com. Where else can you find the exclusive Pot Mate of the Month? Take a pot quiz and win prizes. Scroll through hilarious memes and jokes, and check out the latest podcasts, news, and trends, all while having your own profile and voice in the pot.com forum. Visit thepot.com today and get lit.